This is Gerald, celente. It's Tuesday, July 3rd, 2018, and here are some of today's trends in the news. On the market front, Nikkei down, Hang Seng down, Shanghai up a little bit, but still in that bear territory, down over 20%. Lot going on in China, and matter of fact, today you just got your July Trends Journal, History Before It Happens, and a lot about China. You know, one of our top trends for 2018 is follow that yellow Silk Road. Yeah, that Belt and Road Initiative by China. What it means, where they're going, is it going up, is it going down, will it be a dead end? That and much, much more about the future of China, where they're going, the ups and the downs. But anyway, going back to the markets, over there in Europe, everything's up a little bit. Here in the States, the Dow is up over 130, boop, down over 130. NASDAQ, same thing, down. Oil, up a little bit, and gold had a little spike, and Bitcoin had a bounce. So what happened? Dow drops more than 100 points in shortened session as Caterpillar and Apple shares fall. And Apple fell more than 1.5%. Let's take a look again at what's going on in the markets. These FANG stocks, the Facebooks, the Alphabets, the Apples, the Netflix, and the Googles, they're overvalued. And the stock markets are over-leveraged. That's what's going on. We're seeing the correction that we had forecast. But equities rose earlier in the day when those energy shares jumped because West Texas oil popped over that $75 a barrel mark for the first time since November 2015. So, what's going on with that? Well, you know what's going on. Check out your new Trends Journal. Mass murder market shock. That's right. It's all in there. I know. Sounds like a lot, and it is. And by the way, when you're looking at gold prices, yeah, they went up a little bit today, but it's all about the dollar. And where's the dollar going? Well, where the dollar goes, the emerging markets submerge differently lower. Again, it's all in your new Trends Journal about emerging markets, about the dollar, about China, about oil, about gold, about a globalnomic viewpoint that you won't get anywhere else, money back guaranteed. This is a mid-year report of the top trends that we had forecast in 2018, one by one updated. I mentioned about cryptocurrencies. Hey, take a look at this. Switzerland looks to liberalize cryptocurrency banking assets. Switzerland's fast-growing cryptocurrency industry could have full access to conventional banking services by the end of the year. What does this mean? It's only one of your top trends for 2018. Cryptomania cash-in. The ups and the downs detailed like you won't find anywhere else. This included history before it happens. It's all there. Back in the States, home prices make the biggest jump in 4 years. They jumped 7.1% in May. During the first quarter, this is according to CoreLogic, we found that about 50% of all existing homeowners had a mortgage rate of 3.75% or less. May's mortgage rates average a 7-year high at 4.6%. And we have an increasing number of homeowners keeping the low-rate loans they currently have rather than selling. That's one of the reasons why the costs of housing are going up. There's a shortage of them. Not enough millennials having dough to buy them. People are holding on to them. The prices are moving up. Where is it going? Again, as goes the dollar, goes the markets. Forget this stuff about tariffs, and that's what they're saying is bringing down the markets, and trade wars. This Friday, they're going to impose $34 billion of sanctions, well, not sanctions, tariffs, I should say, on China from the United States. You know what that's equivalent to? 0.01% of their GDP. Nothing. They have a $375 billion trade surplus with the United States. It's bigger than that. What's going on in China, we put all the pieces together, and it's getting to be a bumpy road. China income tax cut aims to lift spending. Mall vacancies in China. Overcapacity stalls mall projects in China. China's slowdown in consumer spending is driving shares lower. And not only are the mall projects slowing down over there in China, but you know what's happening here in the States. Well, the latest report. Mall vacancies hit 6-year highs as online shopping takes a toll. And what does that mean? Happens to be one of your top trend mid-year report, brick and mortar bounce back. No, it's not the end of the mall world. It's changing. And again, we were the first, many, many years ago in my book, Trends 2000, calling the pall on the mall. But something else is happening, and it's another top trend. Organic growth cities. It's not the end of brick and mortar. Yeah, in China, about 20% of retail sales are online, but that still leaves 80%. And in the United States, you're looking at, there's never numbers you're looking at, it's only around 13% at best. So, check out your new Trends Journal, History Before It Happens. So what's driving the markets up? You know it. Right here. Hot M&A market is on pace for record. Big ticket deals spur record global M&A boom. The U.S. remains the largest market for mergers and acquisitions, having reached $1 trillion already, up 82% from last year. And it's around the world. In Europe, activity has climbed 96% to $760 billion. Global private equity-backed M&A activity totaled $204.3 billion during the first half of this year. Okay? That's what's doing it. Now, all this debt load they're taking on, as interest rates are going up, how are they going to pay it back if there's a slowdown? Oh, you want the answer? It's in your Trends Journal Mid-Year Top Trends of 2018 Special Edition Report. And what else do we have here? That's what's driving the markets forward. China's chemical giants to share a chairman, signaling a merger. That's right, two big companies are going to merge, or two that would reduce the financial risks attached to China's $43 billion takeover of Swiss agribusiness Syngenta AG last year. ChemChina borrowed heavily to fund that acquisition, which followed a $7.7 billion purchase of Italian tire maker Pirelli. All right? How are they going to pay back the debt? As the Chinese yuan, the biggest decline against the dollar since 1994, when China joined the money game in the world's organizations. So now, with sales going down, with the value of their currency going down, how are they going to pay off that debt? It just keeps going more and more into the debt column. Nestle in talks to buy pet food maker for $2 billion. One after another. Micro Focus to sell top growth unit to EQT for $2.5 billion. Let's just keep going. This is what's driving the markets. It's a fact. We detailed it. Stock buybacks and merger and acquisition activity. ADM feeds hunger for diversity by pushing into nutrition. The Chicago-based Archer Daniels Midland, one of the world's biggest grain traders, said it was in exclusive talks to acquire Neovia, a French animal feed business. So there you see where we're going. The future is detailed. It's factual. Again, all this noise you're hearing about tariffs and trade, that's not what we're concerned about. We're concerned about bigger issues. Among them, I talked about oil prices. One of the reasons oil prices are also going up because Trump pulled out of the Iranian nuclear deal back in May. Since that time, when there's the threat of pulling more supply out of the market, you're seeing oil prices going up. How are the consumers going to afford higher oil prices? How are the emerging markets that are already deep in debt and oil is based in dollars, their currency's declining, they have to pay more for their oil? And how about countries like China, as I mentioned, that have real problems going on already? Or how about India, that needs 80% of its energy sources coming in from the outside as the rupee is hitting historic lows against the dollar? Where are the markets going? Where's the economy going? What are the big geopolitical issues to watch? That's why you subscribe to the Trends Journal. History before it happens. The answers are in black and white. This is Gerald Celente.